The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. This is Andrea Castello with the National Association of Mortgage Brokers. Thank you for joining us today for a wonderful presentation reviewing one of NAM's member benefits, LANIS Tier 1. We're excited to have the founder and CEO and the VP of Product Management with us today. Before I turn it over to them, I'm going to go over a few housekeeping items quickly. Just so you're aware, the webinar is being recorded. About 1 hour after the webinar, you'll receive an email automatically generated through GoToWebinar that includes a recording of today's presentation so you can view it at your convenience. If you have any questions throughout the presentation, please type them in the questions section in the GoToWebinar toolbar. The presenters will address your questions at the end of the session. And with that, I'll turn it over to Randy Senzig, founder and CEO of LANIS Tier 1. Randy?
Hi, everyone. Thanks for joining the webinar today. And this is going to move pretty fast because we have a lot to cover. And I know how busy you are. Just to let you know, I'm not a technical guy that just happened to come up with the software for the mortgage industry. I'm actually the broker owner of Thousand Oaks Mortgage. I have been for 21 years. Started the business from scratch. And just to give you an idea, because again, I know time is money and saving time is the most important thing. Well, I was a single full-time dad raising a 10 and 7-year-old, taking them to and from school, making dinners, laundry, everything that a full-time parent does. So I understand busy. So I'm going to ask you to actually put yourself on the side. Don't be checking your emails. This is tried and true. I've been using the prototype, believe it or not, in an Excel workbook for over 20 years. And what we did is we took that Excel workbook and we put it into a cloud application. So this is, without question, a revolutionary new product. There is nothing like it in the market. And we're going to talk about some basic things here, like definitions. All right, because some people say, yeah, they'll do this, and some people say, yeah, they can do that. But the issue is what is really a loan origination software? Well, you know, what it basically is it handles loan processing. I mean, yes, you can use it as an interview assist tool and come up with one loan, present that to the borrower, and they say either yes or no. Well, we're going to show you some things that I think you're going to be surprised about. So in that pricing, it's typically a single loan application, and it's just basic loan details and analysis. There's really not a lot of meat to it. And to try to do, you know, a second loan or a third loans, some systems just won't let you do that. Or if they will, it's very, very cumbersome to use. So what if you could also do the following? And when I say provide within minutes, I mean, we're going to get into some details and I think it'll surprise you. But a 2-page full financial analysis, multiple loan options, the return on investment, for refis net tangible benefit, for purchases, the cost of money over time. And the system is actually going to be 100% accurate in all of its numbers. And we built in compliance things into the software so you don't submit a loan and find out all of a sudden it's out of compliance and it's dead on arrival. So we're going to save you time with that as well. And when I say 8 to 12 hours a week in the origination of loans, it absolutely will. I knew the CEO of Ncr Mortgage up in Northern California. He had a 16-person broker shop, largest and the third oldest in the area. He took one look at this and said, this is going to save loan officers 8 to 12 hours a week. That's important to understand. What's also important to understand is the loan processor time, because that can be a bottleneck that can slow things down. Well, with my loan processor, we asked her, because she is an independent, she's third party, and she works with other brokers and loan officers in the area, and asked her how much time she saves working on my files versus another loan officer. And she said 6 hours a week. Now think about that. What's that going to do for your turn times? What's that going to do, when you're actually trying to submit a loan? That means once the borrower says yes, that loan's going to go into DU, get your approval, and then you're onto the underwriting process. So with what we provided, in our 2-page financial analysis, it absolutely helps, pardon me, the borrower experience. They just love the details. It makes it easy for them to make a decision, and that's a wonderful thing. Now, the point of sale, that's another piece of it, okay? When you think about it from a point of sale, it gets information from the borrower to the loan officer, but it's the loan officer's responsibility to actually work that file and to verify the information before it goes over to the loan processor, before it gets into DU. You have to look at the information and, again, verify, because that's exactly what underwriters are going to do. Pardon me. Some of the systems out there will collect docs, credit, verifications, and you can run AUS, some versions, okay? Now, what's interesting is that, push button, get loan. Well, that's one loan, and if it's not the right loan for the borrower, then you've got to change things around. Well, I've gone up against Rocket and won the loans just based on our financial analysis. So, with a single loan, at that point you're fighting, the rate battle, and we can help and show you ways to actually win rate shoppers and have them become your borrowers. So what if I could also do the following? Okay, we're talking, point of sale systems. Connect to a full financial analysis engine before processing. That's really key. Verify loan details for accuracy and compliance. Absolutely, you need to do that. And provide your borrower with several loan options, and we can go up to 5. And they can choose in a side-by-side format that makes it very easy to understand which is the best loan for their financial situation. And again, I want to stress the borrower experience, because with that borrower experience, you become a trusted advisor and you're going to get referrals. Those referrals are absolutely spectacular because they come to you because you've done a good job with a past client. Now, there's also presentation software out there. Presentation software, it presents financial options to the borrower. It can have fancy graphs and all kinds of nice stuff. And it enables the loan officer to actually win the loan. All right. And it will import into your loan, into your LOS for processing. Key point here is you still don't know if that loan is actually going to work. So you win the loan, but you really don't know. Okay. So what if a point or a presentation software could also provide the loan officer the key performance indicators, otherwise known as KPIs, necessary for loan approval. Identifies compliance issues which can cause the loan to be denied up front. Okay. Loan officer and the processor are working on loans that'll close. We've got some statistics that'll surprise you. Loans that will close, remember that one. Lender operational departments are working on quality loans. Remember that one, because that affects all of our turn times, and our turn times is how we build our business quickly, efficiently, submitting the loans and closing those loans. So with our software, it's also going to make you a subject matter expert to your borrower, and that's key. The difference is absolutely amazing, and we're going to show you that. And by the way, I'm not going to PowerPoint you to death on this one, okay? We are going to actually show you the application and how to use it and some of the presentation tools. I think you'd be surprised. Here's where we actually fit in. And when you think about it, in the middle of the LOS and the POS is where origination actually starts. Okay, we can win a loan, but you need to make sure that that loan's going to work. Okay, now you can also have files coming into us from, like, for example, your marketing website. I have borrowers that will actually go to our website, fill out a 1003, and we have it imported into our tier 1. We present the solutions back to the borrower. They pick the loan, and we're off and running. Some CRMs in this business, you can actually get a 3.2 file. And by the way, right now today, we are doing 3.2. It's running beautifully well, import, export. I know we're in the 3.4 URLA, and we have that in process. But what's interesting is that March 1st, as everybody knows, is experienced. It was not exactly the most elegant transition to a new format. So Calix Point, for example, is having some issues. Some other LOS are having issues. Lenders are having issues, and that all creates problems. Well, we've actually, in some of our import-export with the 3.4, we're even solving some of the problems that are currently in the marketplace. So with that, I wanted to go on and just reiterate, this is the most efficient cloud-based mortgage pre-qualification, presentation, and compliance solution available today. It is a revolutionary new product. Again, we're positioned between the LOS and the POS. Now, when I say work on loans that close, and this is historical data, by the way, 95% or better. There's Stearns Lending, for example, I've been 100% for over over 3 years. Key point here, submitting a loan to close, pull through, how we're all measured, believe it or not, the industry average is actually 65%. That means that lenders staff for 100% of the loans that come in, and that's where you get your turn times. The problem is they're working on 35% of the loans that come in that will never close. Keep that one in mind because turn times are important for getting things done fast. So efficiency does count, okay? And I wanted to reiterate 8 to 12 hours a week or more in time spent configuring possible loan solutions. We're going to show you some things that'll just amaze you. All right, compliance, absolutely critical in our business these days. Transparency, it's a way to win referrals from your borrowers. Also, if you have financial planners that are referring business to you, they love the transparency and how this is done. And believe it or not, they have a better understanding. And that's the reason why you get referrals from financial analysts. Accuracy eliminates issues with loan submissions. Like I said, we are 100% training. Now everybody's thinking, okay, it's a new software. I called one LOS system just because I wanted to test it. And they said I had to sit through 10 hours of training, okay? 10 hours of training before they even turn it over to me to be able to use it. That's nuts, okay? So we built this with little or none needed, okay? In a focus group, we had 6 people. One loan officer was great with a HP calculator. With a PC, was not very good, okay? Another loan officer that hadn't touched a loan in 10 years, he was now in the title business, and 4 other people that were non-industry related. All of them in 20 minutes, okay, were able to navigate through the system and get 5 loans done with 100% accuracy. So when I say it's easy to use, it's a plug and play, okay? You can literally sign up, and by the way, we have a special running. And if you wait till the end of this, I think you're going to be rather surprised with what we're going to offer today. We firmly believe this is going to change the way you do business. Okay, what we're going to learn today then is I'm actually going to show you 5 purchase loans in less than 4 minutes. Okay, 5 refinance loans in 7 to 12 minutes. Okay, and the reason for that is that some refinances can be a little bit more challenging than in trying to figure out what's the best way to go. You got debt to income issues, you know, there's some compliance issues. We're going to show you some things today that will really surprise you. 100% accuracy. Again, this is more than presentation software. We're talking about submitting loans and closing them because that's our job. 8 to 12 hours a week, absolutely. What that's going to do, you know, everybody says it gives you more time to build your business. Well, we're talking about not only building your referral business with borrowers, we're talking about real estate agents, and we've got some tips on how to do that, and also financial planners, divorce attorneys, CPAs. At one time, believe it or not, building the business, I had 15 realtors throwing business at me. When I say I put this software to use, I was doing 20 to 25 loans a month with 1 loan processor and raising 2 kids by myself. You can do this. I can guarantee you. The reason being, there's 700 built-in calculations in this and decision trees. Put your calculator down because, quite frankly, it's wasting your time. So, no setup fees. That's a plus, okay? You can use it immediately, and it complements. We're not competing with other systems, okay? It complements your existing systems that you have. Import-export feature fully available. The 3.4 is going to be included in any upgrade. Again, those 700 calculations and decision trees built in. I know I'm repeating myself here, but it's really important because if you're using Excel spreadsheets, you still have to take that information and put it into your LOS to make sure that those numbers work. Well, we've integrated all of those things. That full 2-page financial presentation for up to 5 loans, borrower is going to have absolute confidence in you as a professional. You become that trusted financial advisor. And we have this very, pardon me, this very, very cool intent to proceed feature that we'll show you here. You'll love it. Okay. Now, a lot of people just do agency or govie loans. That's great. But when the phone rings, and this market's changing, it's changing from refinance. And if you don't have any other types of business that you're doing, you might be looking for your next career opportunity. Well, don't. Stay in the business because we've made doing FHA loans incredibly easy. VA as well, and USDA does a lot of the calculations for you. FHA, for example, you have to figure out the base loan amount. We do it for you. Yes, no, it gives you the answer. Now, the other question is non-QM is incredibly hot. And we know that that market is going to grow. It's been growing for the last couple of years, but now because of the pandemic, we know that there's going to be issues that come up. If you don't know how to do non-QMs, select non-QM from our drop-down box. It's going to start asking you questions. You fill in the blanks, it will give you an answer. Some people, they're not sure about how to do jumbo loans or figure out reserves. We've got that built in. Hard money, construction, fix and flip, or portfolio kinds of loans, private money, small commercial. We do all of that. If you don't know how to do those loans, somebody calls borrower and says, hey, do you do these? Yes, I have the LANIS Tier 1 software. I can do those kinds of loans. By the way, I have 72 different lenders that I work with, and it runs the gamut from agency all the way down to small commercial. All right, next question is where do we really fit in? Revolutionary new product. It's a brand new niche, okay? What we're going to do is we're going to plug into that LOS. I've used Point and Encompass. Some of you may be using other systems, but Point and Encompass right now have about 80% market share, okay? So in the future, when you look at this, think about it, because these are what we call service providers. All these service providers, believe it or not, will tie in with the Fannie Mae 3.2 or the MISMO 3.4, the new ERLA, okay? So when you think about it, we're complementing, we are not competing, all right? Most important thing to understand. All right, we'll show this slide again at the end of the presentation, and right now we're going to actually go to our LANIS application. Now you start your day, by the way, with a pipeline, and you can have a time sensitive, or purchase, or refinance. When you want to start a new loan, simply push a button and a box comes up, name the file, hit create, and a brand new application will come up. You just fill it out and away you go. However, if you want to import a file, you can do this now with Fannie Mae 3.2. And again, let's just do this. This is like 2 steps. Go out and choose your file, name it, create it, and that entire file will be imported into the LANIS Tier 1 product. Now, if you need help, we have a number of training tips built in to help you along the way. And they're meant to be easy, okay? And they're meant to be very specific. Sometimes they're going to give you advice on how to solve a problem, or it will tell you, if there's an issue, okay? So here's our navigation. Everything is left to right, okay? If you see a drop-down box from applicant info, left to right, okay? Fill in the necessary information. We've even built in some things here. For example, if you want to look up a property profile, market value, an automated, like an AVM, it'll take care of that. By the way, here's one of those tips. You want to make sure you have the legal name, and you also want to make sure, for example, that the driver's license, the passport, the W-2, the paycheck, the tax return, they all match, because if they don't, you need a letter of explanation for an AKA. And by the way, do that up front. The underwriter is going to appreciate it, and it looks like you've been doing your homework, and that's really important, okay? Now from here, you go over to the subject property. This happens to be, again, a refinance. And by the way, I did import this file. This was a loan that I was working on. So all the dark gray areas, by the way, are imported information for the borrowers. And by the way, this is complicated because there was a first, a second, and a third, and we had to pay off a boatload of debt in order to make this work, okay? So again, little things in here that we built, like solar systems. You got to know that, because solar systems, if you have a lease, okay, or purchase, a purchase, there may be a trust deed on the property. It'll come up on the prelim. If it's a lease, it may come up as a UCC form. Both have got to be subordinated in order for the new first to come in. Loan limits per county. If you click on this button, it'll go right to Fannie Mae, and it will give you every single loan limit for every single county in the entire United States. Really important. Here's one of those simple calculators. Sometimes people, they pay monthly, sometimes they pay quarterly. They don't know, they give you a number, you plug in what it is, it'll do the math for you, okay? Escrow open, there's different things in here. If you've got a dissimilar, like for example, Fidelity, you don't have a sub-escrow fee. That's to remind you that you need to put that information in. Okay, current property information, you put in what the balances are, first, second, third, how much debt we're going to pay off. Yes, that is $55,000. Like I said, this was a real environment. You would think, how do you do this? Well, the system does it for you. All right, and also we've got information here. If there was an FHA loan, for example, in the existing mortgage insurance, you have to calculate that in the payoff, because FHA does a full 30 days, even if you closed in the middle of the month. Little things like that that can trip you up, we've built in here. This happens to be investment properties. For example, this one here, I'll pick on this investment, the second property, it was not reported on a tax return. So that 75% of the rent automatically does the calculations for you. This one over here actually was on the tax return, okay? The reason why you want to put in all this information, by the way, is remember, we have to calculate reserve requirements, whether it's 2 months of reserve or 6 months of reserves, depending upon how many different properties they have. It could be 2, 4, or 6% of the unpaid principal balance is also factored into the reserve requirements. You may have an Excel spreadsheet, you may do it on a calculator. Put them aside, because our system does it for you. You don't have to touch it. Oh, and by the way, Schedule E calculator, we made this really super simple. Okay, when you want to figure out and you don't know how to read a tax return, well, just go to Schedule E, line 21, for the 2 prior years and plug in the information. This one happened to be, I've got 218, but pardon me. I guess if I get typed this morning, this is a sign, by the way, of too much coffee. Okay, so 220, we've got 12 months, it'll do the calculations for you. If you had 2 full years, put in 24 months, it'll do the calculations for you. Save the information, and now you're on to the next. Here's the debt. Yeah, we had a bunch. You can actually figure out paying off the debt or not paying off the debt. Just click a toggle switch. It'll do the math for you. It changes the entire dynamics. If you go to no, now you've got all 5 loans with the debt to income ratio down here at the bottom after you've paid off all the debt, okay? And if you do no again, pardon me, all 5 loans will be the same. In this situation, we wanted to see which loan was the best, which one also had the best debt to income ratio. So now you can just go over to whichever loan you want, and it'll actually do the analysis for you. And then you have all these choices here of what you actually need to do. Again, one of those training tips, oops, sorry about that. We have percentage of credit used because that makes a difference. Some people do not want you to run their credit report. Well, based on what we're seeing here, we know this guy's got low scores because he's got a couple of credit cards that are above 30%. That'll bring the scores down. So he's not at 780 or 760. He's more like 720. All right, so there's a visual indicator for you. Income. A lot of people get tripped up on income. Well, here's a wonderful thing. You can figure out, because all these different calculations. I have a client that is going to be purchasing the home. They get paid every 2 weeks, okay? Not twice a month, but every 2 weeks. So pick monthly, 26 pay periods. If you get somebody that gets paid on the 1st and the 15th, pick the 24th. We've got hourly, weekly, professors and teachers. Teachers can get paid 9 months out of the year, 10, 11, and even 12 months. Like, for example, we're in Ventura County, California. Some teachers actually get paid 12 months out of the year. So again, save the information. Bonuses and commissions. Remember, think about this. Bonuses and commissions, you got to have a 2-year average in order to use them. Well, it'll do the math for you. You don't have to worry about it. Okay? Save, on to the next. Reserves. You're going to love this one. Now, in this situation with reserves, when you look at it, here's 100% because it's checking and savings. But in reserves, stocks and bonds, Fannie is only going to allow you 70%. Okay? Retirement funds, it'll automatically calculate to 60%. Very important. So now you've got your total reserves. But remember, we had 2 properties. Remember I talked about 2 months or 6 months? Well, and there's 2, 4, or 6% of the unpaid principal balance. It does the math for you and tells you if you have enough reserves. Okay, so there's the reserve requirement, and there's what's left over. If you don't have the reserves done, or you don't have enough reserves, your loan could actually fall apart in underwriting right off the bat. Now, I want to show you one other thing here real quick. Same reserves page. Now, we also have a purchase application. So here's a purchase application, right? Purchase. All right, let's go over the reserves. All right, we've got another button down here, show equity from the sale calculator. And we're going to get to that one here in a minute because I think you're going to like that one a lot. Okay, now, loan type. You have a choice here of what types of different loans you'd actually like to do. And there's a list of every single loan that we do. So if you remember the PowerPoint, we showed you all those, pick it, and then it'll tell you exactly what you need to do. If this was a jumbo, for example, there's your reserve requirements right off the bat. You usually can find that information from one of the lenders, what they call their matrices, and away you go, okay? So save that information, on to the next. Now, the one question is like, do I have to do this on every single one? Well, maybe you want to do a Fannie, a Freddie, because some lenders price them out differently. And then you might want to actually put in an FHA or a VA to show the borrower some options. Okay, so you have that ability in here. Or, for example, just simply toggling this, and if all 5 loans are the same, you simply configure loan 1. All of this information over here disappears because you don't need it. You're one and done. Okay, so pricing engine. All right, in this situation, basic information, what the first payment date's going to be. The lock is important. We always price our loans at 30 days, and we tell the borrower right up front, we do this because we do not know what day the loan's actually going to close until you make a decision of which loan you want. Here's what's interesting. I tell people, some loan officers will price things out for 7-day locks. It makes them anywhere from a quarter, could even make them 3/8 of a point cheaper. We don't play the low ball game. Our numbers are based on reality. 30-day lock. And by the way, we do not issue low ball estimates. We just refuse to. Okay? You'd be amazed at the reaction you get from borrowers. All right, now, in here, you put in your information, what lender you're going to use, because maybe you want to do 2 Fannie Mae loans side by side from 2 different lenders. This one happens to be Kind Lending. Well, you could have Stearns or UWM. We're approved with all those as well. And so the only information you're going to have to put in here is your pricing. Okay, your rate, your fee or your credit, what type of property is, condominium, $240, it's monthly. Sometimes it could be quarterly, sometimes it could be annually. By the way, we do principal and interest only loans. And yes, if there's a 40-year loan that comes out, whoops, looks like my screen sharing was just paused. Hold on 1 second. Let me do this again. All right, so we're back, we're live, and we're saving. Now you're looking at it and going, that's a lot of information. Do I have to re-enter it? No. Populate data from loan one. I populate data from loan one. All I have to do is put in the rate, the fee or the credit. I'm on to the next, do the same thing for the remaining loans, and away you go. Now, pricing. This is really key, all right? When you take a look at this, we have built in all those different pricing add-ons. Really important so you don't make a mistake. By the way, in 21 years of business, I've only made one mistake in pricing, only one. And I called, the CEO of Montclair Mortgage and said, hey, I just made a quarter of a point error. It's a $400,000 loan. It's $1,000. What do I do? He goes, macaroni and cheese. He goes, our policy is we make an error, we eat it. It's amazing, but only one error in 21 years. Think about that one for a second. All right, you put in your broker fee or your banker fee, save it, on to the next, and you're thinking, okay, I got to do this for all of them. Remember that populate data from loan one? Yeah, we did. We're done. Okay. By the way, the reason why we made that an option is because if you have two different lenders and side by sides, their LLPAs could be different. Okay, they could be different. They may be making more of a profit than what Fannie or Freddie is charging. They may have like during COVID, some people had a 3/4 of a point add-on fee. Some people had that distressed, refinance fee. It was as much as 2%. We saw some amazing numbers out there. So again, we built it for speed. We built it for accuracy. Now here you've got 5 loans, right? Equity remaining, cash down with a second, fixed loan amount. You never know what the borrower is going to need. Again, so we made it quick and easy for you. 700,000, yeah, and this one was in LA, and it was a little bungalow home, so our home prices out here are a little steep. Okay, with here, we're going to subordinate the second, we're going to subordinate the third, so it actually puts in the monthly payments over here. We always do the first at 80% loan to value. All right, over here you have, again, debt to income ratio. We paid off debt, which brought it down to 29.34%. That's important because for this borrower, he wanted to reduce his overhead. He was retired, okay? It gives you the APR, the loan to value, the combined loan to value, and look at this, origination charges. At 2.75 to 2.99%, it'll flag you as being yellow because you're real close to the 3% cap, okay? That 3% cap includes lender fees, broker fees, and some escrow fees. We calculate all that in automatically. If it's at 3%, it's going to go red. Don't even bother submitting the loan. You're out of compliance. It'll be dead on arrival. Don't try and fix it later because, believe it or not, some lenders will not let you do that. Okay, so this is your snapshot. We've got all the information in here. Total reserves available. Okay, closing costs, everything. Loan calculator. How did we get there? Okay, there's the new loan amount. Okay. We've got $652 left. Think about it. Some lenders, they cap you at 2%, like Fannie Mae. You can't have any more than 2%. If this was a rate and term on the first, you're absolutely capped there. If you got more than 2,000, that just means you have to skinny down the first loan amount. Okay. Same thing for loan 2, except for the fact that we're subordinating a second, yes, but we're not subordinating. We're going to pay off that third. Hold on to that thought for a minute. Okay, and the same thing for loans 3, 4, and 5. Okay, now we got to go figure some closing costs. Okay, again, by the way, for a broker, on the formal loan estimate, you cannot, it's illegal for you to disclose that fee. Well, I've been disclosing my fee for 21 years. Borrowers love it because I'm totally transparent. Okay, it's off to the side so it doesn't come into the calculation. Now, what's interesting is I tell the borrowers, I said, remember some loan officers are going to tell you, and I know that we do this, okay, don't worry about it, the lender's paying my fee. Well, okay, that's fine. But they're going to see the fee on the closing disclosure, page 2, right-hand side, little brackets with an L in a minute, lender paid. That's the first time they see the fee. And some of your borrowers may get shocked. They may not like it, okay? So what you do is you address it up front. The other thing, by the way, I love it, borrower said, is there anything I can do about that fee? And I said, I've only had to raise my fee in 21 years 3 times. One was at GFE 2020 when everything changed. The other thing was October 15th, October of 2015, I should say, when we came out with TRED. And I said, with our software, we're so efficient, I don't think I have to raise my fee at this point. We've got this pretty well dialed in, so we're running a very efficient shop. I mean, less time I spend on a loan means less that I have to raise my fee. And I had one borrower said, wow, that's incredibly smart. He goes, I can't believe it. In 21 years, you've only had to raise your fee 3 times. Well, you know what he was asking me for? He was asking me to discount my fee. What I told him was the truth. I've only raised it 3 times in 21 years. Okay. We've built in little things here, like, for example, the grant deed over here in Section E, in and out of the trust. Those are fees that you need to understand. So your accuracy, because we have tolerance levels, right? We have tolerance levels. So we built those in so you remember and you don't make mistakes, okay? We have also these drop-down boxes with all these different things. Remember, all these things have to be done the same in order to be compliant, okay? And by the way, we had a borrower that said, why is my loan amount so high? I said, well, that's because I'm paying off $42,000 worth of debt, okay? And we add that to paying off your mortgage. That's the reason why your balance is so high. And yes, we do have closing costs, okay? By the way, over here, you can figure out your initial escrow, 3 months for HOI. In California, for example, we pay taxes twice a year. At this time, we're collecting about 7 months. So when you really look at this, you could, the borrower says, like on loan 2, I want to see what impounds would be versus having no impounds. Well, you can do that here very simply. But if everything's the same, populate data from loan 1, yes, on to the next. Populate data from loan 2, yes, on to the next. Loan 4, yes. Loan 5, yes. And we're okay. Let's go to the summary sheet, okay? Because we're done, all right? Now, we ask you, by the way, to import your logo because this is all part of branding. When I compete for one of the top 10 loan officers, in the past 21 years, I've never lost a loan to him. He sends an email with some numbers in it. I send my borrowers a 2-page, because what I'll do is I'll just right-click, I'll hit print, I'm going to save it as a PDF, and then what I'm going to do is I'm going to send this over to the borrower. And by the way, I can do that in 7 to 15 minutes on a refinance loan, okay? Pardon me. And here, just to go through this a little bit, because I think this is going to actually surprise you. Here's your 5 loans, all right? It's giving us our loan to value, and here we were going to subordinate that third. Here we were going to pay it off, okay? Because we're paying it off right here. So it's very clear for the borrower to look at this and to go side by side and figure out which is the best loan. But wait a minute, he didn't have to figure it out. Our software is going to tell him which is the best loan, okay? We always start with the lowest interest rate because that's buying down the rate. Sometimes that makes a lot of sense. But you can also have the no points, no fees, or lower cost, okay? And we can do that and show them the difference, okay? Now, for example, you want to see what the principal, interest, taxes, insurance, subordinated loan amounts are and what the bottom line is? Well, there they are, okay? For all loans. Remember the reserves? He matches reserves. According to guidelines, we got a loan. Debt to income ratio. Remember, this guy's retired. He wants the lowest overhead possible. Well, there it is. We saved him $1,372. Remember, this is a real live loan. This is something that we actually did and closed. Okay, now net tangible benefit has to be over 5%. That loan is going to close. All right, that's again one of your key performance indicators. Okay, it's important because if it was 3%, the loan may get denied right off the bat. Okay, so when you look at his new payment, his combined payment, okay, remember this one over here we're paying off. What his existing payments are: principal, interest, principal and interest on the first, the second, and the third. So totally, he was paying $4,427 a month. And here's your loan comparison. He's going to save $2,046 or $2,018. Remember, loan two, we were paying off that third. Here's your APR again. Okay. Here's your number of months to recoup your closing costs. So we call it the red box. We tell our borrowers, here's the closing cost, but hold off. We're going to show you where the true return on investment is, and it's in the red box. Okay. So when you look at cash flow, and I've had borrowers say cash flow is the most important. Okay, I got it. And I said, but you want to consider the cost of money over time. Well, the cost of money over time, for example, is the monthly savings times 24 months in this example that I just highlighted, minus the closing costs. So his net is $31,860. All right. When you look at all these different loans over here, and by the way, you can change this. You can measure cash flow. Let's say he's only going to be in the house 5 years. Well, in 5 years, which one has the best cash flow? It's this one right here. It's loan 3. Let's say, for example, he seriously is going to sell that home. Okay, which is the best loan long term, meaning net protecting his equity? It's right here. It's loan 4. Okay, 114,709. That is by far the best loan. Now, when you think about it, how much principal are you going to pay off? I've had people look at this and go, well, wait a minute, I can $62,000 and I'm going to sell at some point, but I want to pay off my principal faster. Well, then there's your answer. Okay. So there's all different kinds of things here. Now, remember what I talked about that intent to proceed? You have 5 loans up here. Which one do you want? Okay, the borrower, because think about it for a second. When we know 6 items, and if you're only quoting 1 loan, you know what the loan amount is. By law, you have to disclose within 3 days. Well, our borrowers make the decision. This right here, please indicate which loan you intend to proceed with. Once you have selected the appropriate loan, we will issue a formal loan estimate and loan disclosures. I could be playing with this borrower for weeks, but until they decide, then I have to disclose, and I've got 3 days to do it. And by the way, when you select loan 2 or loan 3, and you now go up and you click on F&M export because you need to send it into your LOS, you click on that, and by the way, it's not going to let me show you this. Darn. Okay. Well, that quick, what happened is, let me go back here to sharing, and let's see here. Okay, for whatever reason, it is not allowing. Let me try this one more time. Well, it's actually not going to let me do it with GoToWebinar. So hold on a second here. Let me pull up that file again just to double check. Okay. Some of these Zoom or webinars, they won't let you do things you want to do. So I'll describe this for you real quick. Just by hitting that F&M export button, up popped the Fannie Mae 3.2 file. Again, soon it will be the 3.4 file, and you just save it wherever you normally save your exported files, load it into your LOS, and you're good to go. Okay. So now, loan estimate. Okay. Notice it looks an awful lot like a formal loan estimate, but it's got a border around it and it has some additional information. It's really important when you're sitting and you're talking with your borrowers so they know what kind of loan it is. Now, for example, HOA fee. This is one of those gotchas. The existing form, the loan estimate, does not add it into the final number. So when the borrower asks you, what is my final payment? You have to give them this because it doesn't do the math for the HOA fee. We also broke this down so it was more clear so the borrower understood exactly where their payments were. The other thing is that again, lender paid. And by the way, you can turn that off. There's a toggle switch. Display your fee, not display your fee. I can guarantee you one thing, your borrowers will love it because you're so doggone transparent and nobody else is. Okay, it is a differentiator. And here's all the rest of the information that we put in. So again, it looks like an LE, sounds like an LE, it is an LE. It's just more detailed. And you have 5 of them. So what I do is, again, with the refinance, I basically, put it into a PDF and I take loan 1 and maybe loan 5 so they can see the difference in rates and fees. And all I do is I right click, I print it, and the next thing you know, I'm saving it as a PDF. And there it is. The borrower's got it. Much more detailed. So again, when I said I was competing with that top 10 loan officer, I've never lost to him because he sends an email with some basic numbers in it. I send him a full 2-page financial analysis. I send them a couple of loan estimates. I'll even jump on a Zoom link with them and walk them through. And at that point, the borrowers, they choose to make the decision to go with us. Rate shoppers, by the way, we did a little workshop on rate shoppers. And the reason why that's such a hot topic is my conversion ratio on rate shoppers is probably better than 90%. And why? I'm providing them with a 2-page financial analysis. It's no longer about the rate or the fee, the origination charges. It's the full financial analysis of what loan is best for them. Okay? It changes the game. It also puts them in the position of which loan to proceed with. Game changer. It's a revolutionary new product. And we've gone through a number of different things. I wanted to show you one last thing on this purchase. Remember, we were on reserves. And by the way, looks familiar? Yeah, it sure is, because we built it so the learning curve is minutes, not days, or number of loans. It's minutes because it all looks and feels and acts the same way, except for reserves, right? Show equity from the sale calculator. Remember, on this one, we had current home sales price. That's this property they're going to sell. You're going to pay off a first and second. There's the monthly payment for the first and second. We add $100 in for recording, reconvey, fax fee, processing fee, whatever they want to call it. So we come up with more of a net number, okay? And again, little things like here in California, 1.25% is a good number to use for escrow fees. If you're in an attorney state, it might be a little bit different, okay? And again, remember the good old days where real estate agents were charging 6%. Well, there's $24,600. But let's say, for example, it's 5%. By the way, did you ever see how fast that number changed? Those numbers, 700 calculations, we're talking split seconds. By the way, remember we were going to be paying off debt? In this situation, all the debt was going to be the same that we were paying off for all 5 loans. Well, then there's your net number coming out. That's how much money the borrower is going to net. All right. So when you look at this, a lot of tools, a lot of built-in. I want to do one more thing here. Here's our website. Here's our resources. Okay. You're going to like this. Here's all your government agencies. These are similar. I mean, this is stuff we use every day as loan officers. Okay. It's all here. Okay. There's over 92 links built in with everything that you could possibly imagine. And it'll give you the option, send me a link that you use that you love, okay? Like, for example, AVMs, okay? Consumer Finance Protection Bureau. I hope everybody knows, but if you're doing a loan, you need to send them this 71-page document. Came up pretty quick, didn't it? Okay. Let me just go back over here. Sorry about that. The other thing, for example, AVMs, a lot of different AVMs. MI companies, we've got those built into their websites. Income counts. Here's the most amazing thing. This calculator has got all these different forms in it. Okay, a lot of people have problems figuring out Schedule C, okay, self-employed, or Schedule E. Here's a calculator. Fannie Mae uses it, underwriters uses it, and that's how they are doing income analysis. This is so easy to use. You simply go to your tax return, figure out which line item, plug it into the calculator. It's going to give you your amount. Here's a tip. When you've done a Schedule C, for example, calculator, print it out and put it on top of the tax returns. Your underwriters are now checking your work. They're not doing the work. Your loan goes through faster. Also, the underwriter you make friends with because you're making their job easier. And you, as the loan officer, who's ultimately responsible for this loan, has done your work. Okay? It's not always your processor. You can do this very, very quickly, efficiently, accurately, and close more loans and get more referrals. Okay? A gift letter, loan modification. Again, there's 92 different links in here. Okay, and by the way, you can schedule a demo. If you want to do a personal one-on-one, you want to work on a tough loan, schedule a demo on my calendar. Subscriber login, sign up here. We do even have an affiliate program. Okay, sign up. I'm already signed in, so it won't allow me to do that. So I have to switch browsers, but that's where you do that. Now, the other one of the things that I wanted to mention, and we're at the almost at the top of the hour, okay, is we have a special. All right, and that special is, and I think you're going to like this, because you're NAM members. I'm going to email you after this webinar, okay, probably later on this afternoon, a special promo code. That promo code is going to give you 60 days free. You don't need a credit card. It's also, if you decide to sign up and use the system, you're going to get a 14.8% discount, which is equal to about $150, which pays your NAM membership for the full year. And we're going to do that every single month that you are a NAM member. Okay? We encourage membership because NAM is the most prestigious, the oldest organization out there. They're working for us and they deserve our support. Here's my contact information, and feel free to write that down. Again, it'll be on my email as well, along with a little button that says request demo if you want to talk about this one-on-one or how everything integrates together, which is actually very simple. Feel free to go there, request demo. It says 15 minutes. Just make a note. Hey, I've got a scenario I want to run by you. I'll block out some more time so we can talk. Okay? If you want to get a hold of me, there's my email address. If you want additional information from our marketing guys, info@LANIS, and we can go from there. All right, I'm done. I'd like to open it up for questions. Andrea, thank you so much for allowing us to do this today. We're excited to work with you folks. Here's me. Hope you guys are doing good. All right. And let's see here. I don't know if it's going to allow me to show my video or not, but we'll try.
We see your video, Randy. Thanks for a really great presentation.
All right. Any questions that we can answer?
Yes, just a reminder to all the attendees, please type any questions you have for Randy into the questions panel on your GoToWebinar toolbar. We'll give everyone a minute or so here to type in any questions.
Okay. We must have done a fairly good job. We don't see any questions.
Randy, I did see one, two come through now. One attendee has asked, I have not seen a price sheet. Is there any information you can share related to that?
Yes, standard month-to-month subscription is $85 per month. You can cancel at any time. Okay, that $85 again is going to be discounted 14.8% because that's going to help you save money to actually join NAM, become a member. Okay, we do have what we call a portal in the software. It's $95 a month, and it allows your loan processor to actually look at your files, be able to manipulate them. You could jump on a Zoom link together and try different things if you got a difficult loan that you're working with. They can't create a new loan because that's the loan officer's responsibility, but they can view your pipeline and they can work on your loans and make sure that it's working. All right, and if you want $1,020 is for a 12-month subscription. And again, each one of those, you do get the 14.8% discount to help pay for that NAM membership. You know, I just thought of something. I'll put the link to our pricing page actually in the, yeah, I'll put it in the email so you can take a look at it. But again, with the promo code that you're going to receive, you don't need a credit card. Just simply put in the promo code and you're immediately live and you can start using the application immediately.
Okay, there was another question asking about the discount, but I believe you addressed that. Another question came through. Does the program download the pricing from your lenders and add adjustments?
Not today. And when I say that, it basically, just so you understand, that's what they call an API, application programming interface. It allows two dissimilar computer systems to talk to each other, kind of like 3.2. All right, so we're in communications and have been with LendingPad, Optimal Blue, and we've reached out to Ready Price. But what's interesting is like, for example, in Stern's situation, there may be 16 different rate sheets out there. The issue with that is which one's yours, because that information gets plugged into Optimal Blue, for example, and you want to make sure that you have the most accurate. So today, you know, quite frankly, when I'm working a purchase loan, remember this, it's a rate sheet, all right? I can get through and price out the rate, the add-on fees, the cost of the credit, and be done with that bottom row from the application in 4 minutes. It's that simple, okay? So yes, we will in the future, but for right now, no. I also see a question that says, does it work with LendingPad? LendingPad accepts a 3.2 file, okay? You can import a LendingPad file into us and do all your manipulation, and you can send it back to LendingPad. So it will work. It's all Fannie Mae 3.2 standards, not an issue at all. Okay. I did see another question in here. Yes, we do have one dedicated sub account per subscription. Okay. So like, for example, in my situation, I have my loan processor set up. All she does is log in with her email address, her password. She can see my entire pipeline. Yeah, there was another question here. Will this presentation be in an email? It will be ready, and Andrea will actually be sending out a link to it. We will have it posted on our website, www.golanis.com, and you can go to the videos, the support section, and you can actually see a number of the webinars that we put up there as well. One is on rate chapters, and the other one, for example, is on how do you deal with a situation with a lot of debt. And again, we just showed you that refinance, but the same thing could be done for purchase. You know, how much debt do you have to pay off in order to be able to qualify? So yeah, those tools are there. And yes, you will get that link, and it will be actually available on the NAM website, and it'll also be available on ours. And as soon as I do have the link, I'll include it in my email out to everyone.
Randy, I saw another 2 questions that came through here. An attendee had asked, can we issue approval letters?
Good question. I can put that actually up on our website, our GoLANIS.com website, and at that point you would just be filling in the blanks. We have a very strong pre-qual letter or pre-approval letter that I've been personally using, and people love it. So yeah, we could post it up there. And could you actually print it directly out from the app in a future release? Absolutely. And by the way, we're real open to taking suggestions of what you would like the product to be. Okay. This platform is not rigid like some of the older loan origination software systems that are out there. It's very easy to go in and build in new features, you know, new functionality. So if you've got some ideas, let us know.
And I saw another question for you, Randy. Does it download into the new Fannie Mae loan app?
The answer is today, no. Okay. It will download into Fannie Mae 3.2, and from there you can upload it into the new URLA, the MISMO 3.4 format. And you know, as long as your LOS system is able to convert those, that should not be an issue. By the way, one thing that we're working on with our developers, and they said, if you were to take a batch load of Fannie Mae 3.2 files and import them into our application, we could then convert them all into 3.4 and then send them back to you in individual files. So we would actually do the conversion inside the system, and that's going to be a free upgrade. So when we launch our Fannie Mae 3.4, MISMO 3.4 platform, that feature will be standard and at no additional charge. Any additional questions there, Andrea?
I didn't see. Oh, one just popped in here. An attendee asked, what's the expected launch date?
This product is available today. And as far as the Fannie Mae MISMO 3.4, just to let you know, we are already exporting out of it. We're now working on the import because so many different lenders and also LOS systems have been having problems, exporting, which then we would import. That has been something that we're trying to make perfect because, again, we're built on efficiency. So right now we're looking at probably 2 months, okay, for that feature to be available. We will thoroughly test it, and we will test it against different systems before we actually release it. Again, because I don't want my software impacting your day other than the fact that it's going to save you time. Okay. We'll keep you posted. Since we'll also have the email list. We'll keep you posted on our product releases and increased functionality.
Great. That attendee said, excellent, thank you.
Well, like I said, I know we're getting ready here to wrap up, but this is absolutely a game changer. You won't find anything like this in the market, and part of the reason is because the industry has never figured out how to solve the pull-through ratio, and that's 65%. I mean, I ran with some lenders 100% for 4 years. Those of you that have been in the business for a long time, SunTrust Mortgage, I was a preferred broker. When my account executive would call me and give me my report card, she'd say, Randy, there's nobody's even close to you. So when you send clean loans in, underwriters look at that, who it's from, and they're going, okay, I know these people, clean loans, they close, they're not messy files. So the loan officer's done their job, and that's what our job is to do, is to get loans and make sure that they're clean before we turn them over to somebody else to work on. It's our responsibility. I know some people just pass them off, but you think about it. If I'm saving this much time and the loans are that well packaged, we get paid and we get paid faster because our loans close faster. Our close times with some of the largest lenders, we've done refinances in 17 days. We've done purchases in even less time than that, 15 days. And, borrowers love our files and how we present. Underwriters love it. We save time all around. We increase that borrower experience. We get paid faster. Okay, so do one thing. Learn how to do other loans. Our software will teach you. It keeps you in the business. This is a great career. 21 years. I mean, I love it. I love helping people. I love the smiles I get from borrowers. When friends call in, because I worked on some difficult loans, they go, you just did a loan for these folks? I just want to let you know we're more of a mess. And can you help us? Number one, they're not shopping. Number two, you have an opportunity to become a trusted advisor. Okay. And they will actually refer you out as well. You build your referral base. By the way, I've been advertised in 12 years. And again, I was doing 20 to 25 loans a month. So think about it. If I can do it, you can absolutely do it. Oh, I did see there's one more question. I know we're over, but let's do this one real quick. Is there any lost data between the 3.2 and a MISMO? All right. Again, this is a mapping situation. Okay, so if you bring a 3.2 file into us, and when we send it back to your LOS, it'll be in a 3.2, or excuse me, MISMO 3.4 file. It's a mapping situation. Calyx Point, by the way, is having some issues with their mapping, even amongst their own software. And I use Calyx Point, have for 21 years. So we're going to take care of that situation. Like, for example, in the 3.2 file exported out of us into the REO section of the loan application, 3.2 in the Calyx Point, we actually map better than they map their own stuff. And it's because we're using true Fannie Mae format, okay? And we're able to map that to the point where we're actually filling in the blanks. So you don't have to go over there, for example, and figure out home insurance, taxes, and HOA fees, and that goes into one box. We do that for you, okay? And it maps perfectly. I mean, I've tested it many, many times, and it's always been perfect. And believe it or not, coming into us from that REO section, we've mapped it perfectly. So when we do 3.4, we are going to have that just nailed. I refuse to do it any other way because you got to remember, I'm still a producing loan officer. Okay. Ncr reports. Yes, we know how much of a pain those things are. I have to do my own. I understand. So do we and are we going to have those MCR reports? Yes, in a future release, we absolutely will. To quote a past president, I feel your pain. So yes, we are going to have that. How will this help a correspondent lender? Great question. Well, if you're a correspondent lender, okay, and let's say, for example, you're working with other mortgage bankers, brokers, you can actually request that they use this software, okay, so that you have cleaner loans that come into you, okay, if you're the ones funding them. If you're the ones generating loans, then, as far as where your costs and your fees, there is fields that you would put in, whatever, profit that you wanted to make on those loans. So everything's fully disclosed. So it's like the same rules apply. I have been talking to correspondent lenders and large mortgage bankers that are funding loans, and they have to go through the underwrite process. They want clean loans in because that 65% pull through affects the entire industry. So when you think about it, where that loan originator is, if they're putting together clean loans using our software. I once mentioned to one of the largest a number of the top 5 lenders, I said, if we could increase your pull through by 12, even as much as 15%, which should, by the way, still be below mine, okay? But if we could do that, what would that do to your business? And they said, Randy, a 5% increase in pull through would be huge. I did an analysis for one, even after paying for my software, it was going to return $17 million to their bottom line, just based on loans closed, profits. And they're going to be able to use their people, internal, setup, QM, underwrite. And as one CEO said to me, he goes, Randy, he goes, if these people are running so efficient and I don't need people in setup and compliance and what do I do with those people? I said to him, I said, Glenn, put them in funding. You got a 3-day turn time in your funding department. What if it was 1 day? Gentleman just smiled and said, okay, that's peak efficiency. Think about it. You affect the internal operations of your lender, correspondent, retail, credit union. What's going to happen is that your turn times are going to shrink. You're going to close loans faster, and you're going to spend less time per file, you and your loan processor. Okay.
There was one additional question that came through. It was, can your LOS generate an NMLS report every quarter?
Yeah, that's the call reports. And yes, that is on our roadmap. In fact, we have a company meeting tonight to specifically tighten up that roadmap and see when we can actually deliver it. Again, that it will be a free upgrade, okay? Whether you're on monthly or whether you're on an annual subscription, it will be a free upgrade, okay? There's also, for single users, there's no cost for customer service or support. It's just not, okay? Like one individual says, so how many customer service calls do you get a week? And I went, can we rephrase that question? How many customer service calls you get in a month or a quarter? Not many. So that's a wonderful thing. So yeah, we understand those call reports are very time consuming, and we want to make that again as efficient and easy as possible. So you're not spending hours trying to put those silly things together. Okay. All right. We are at 12:12. We still have 17:16 online. If there's any additional questions, rsenZig@golanis.com, and be more than happy to answer those questions. When I send you an email out, there'll be a little blue button that says request a demo. You can schedule time on my calendar. Would love to chat with you. You got a difficult situation, okay? Not quite sure what to do with it. Schedule some time, okay? It says 15 minutes. If you need more, put in the notes section, need 30. We can do this. We want to build the industry. We want to change this industry. We want to make you guys more productive, and most importantly, keep you in the industry. This is a great career. I mean, I raised 2 kids by myself, put them through college, got them their first car, and had free time, okay? So enjoy yourselves out there. Don't work too hard. Work more efficient. And we'd love to chat with you in the future. Thanks for your time today.
All right. Thank you so much, Randy, for that great presentation. We appreciate LANIS Tier 1's time today. And just a reminder to all of the attendees, you will be receiving an automated email from GoToWebinar that will include the recording of this presentation, along with the other additions that Randy shared. So thanks a lot for attending, and we hope everyone enjoys the rest of your day.
Thank you very much.
Take care. Bye-bye.
Bye-bye.